always tell a joke of the month, and since this is Halloween, the joke this time is, why couldn't the skeleton go trick-or-treating?
I don't.
Nobody to go with.
That's right, nobody to go with. I get these off the podcast, so you probably listen to the same podcast.
Took me a minute to figure it out.
The book of the month this month is Extreme Ownership by Jocko Wilkin. I listen to his podcast, and he's got a new book out that I've started listening to, and since he's a very good writer and I like listening to his stuff, so I'm using it as a motivational thing. I'm listening to a chapter a week when things get where I like, I want to quit, I listen to another chapter of his book. But the old book is Extreme Ownership, and it talks about if things going wrong, what could you have done to make it not have gone wrong? And he uses some pretty extreme situations in the book, like weather. He's an ex-Navy SEAL, 20 years in the Navy SEALs, and when they're going on a mission and it starts pouring down rain and they can't get the vehicles where they were going, well, what could he have done to make that not happen? Maybe have the mission on a different day, maybe go a different route or whatever. But it's a really good book on getting you to think about what you could have done differently to get your situation to change, so that you don't keep making the same mistakes over and over. Anybody here, if you know of somebody that would be interesting for the group to hear, please bring it to my attention, or Ria's, or Sergio. We're always looking for people to present and good information. So if you have an idea, or if you, like one person, he said, well, you never have anybody about notes, but he didn't have anybody, but it took about 8 months, and then we finally found somebody just networking and just talking until we found somebody that presented on notes. So if you have a subject that you want to learn about, bring that up. Remember, nobody here is giving legal, accounting, or any of that other kind of advice. This is just for your entertainment. This is Eddie over here, Montoia. This is Blake Cauthen, and both of them are from Community National Bank. So they're not giving professional, but they are professional. So if you have questions, go into the bank, or maybe get with them after they talk tonight and talk to them, because they both are good gentlemen and they can get you in the right direction. Let's see. Which one's going to speak first?
Eddie is.
Okay. Well, this is Eddie Montoya. They both are into commercial loans and regular, and I thought it'd be nice for them to come in and tell us what they need for investors to be able to make you the loans and all their side of the story.
Yeah, so like I said, my name is Blake. This is Eddie. He's a mortgage officer at our Midland Drive location, and he does primarily mortgage. I work downtown and primarily do kind of commercial. So there's two different ways to kind of attack, real estate property. You can go through a mortgage department, or you can go through kind of commercial side. So he's going to kind of go over their commercial, the mortgage way. You can ask some questions, and I'll kind of, answer some on the commercial way.
First of all, thank you all for being out here with us. We really appreciate you guys being out here. Lee, thanks for having us out here as well. On my side of the business, I deal more on the mortgage side, which my rules are guidelines will be based off of Fannie Mae and Freddie Mac. Blake's side will be more commercial, which will end up going this way. So mine's kind of a good start for beginners to start off with. My type of deals that you can do with me or with any mortgage company are basically 1 to 4 unit properties. So as long as there's no more than 4 units, we can do that type of loan. If it's more than 4 units attached to it, then it'll go to Blake on the commercial side. Just like anything else, what you'll need when you're doing these types of transactions are going to be your last 2 years of tax returns. It's really important that if you are doing investment property, and this isn't tax advice, as Lee mentioned earlier, but if you're really doing it, you really need to get your rental income into your tax returns, because when we're doing your analysis to qualify you with, there's some investors that aren't doing that, and it kind of doesn't let them get qualified for the type of house that they're looking for, especially after you're doing 2 or 3 or 4 of them.
Are you saying they're cheating?
taxes in it?
No. It's just getting your income in there the right way.
You're saying they're cheating taxes.
So keep that in mind, and that'll help out. On my side, it's going to be more your personal side. So everything that we'll do will be under your name. So if you're doing something on the business side with the business name, I won't be able to do that for you on my end. Generally speaking, credit scores start off at 620. That's what we can do on my end, but it gets a little bit tricky on the investment side. Rates are kind of based off of your credit score and how much you're putting down on your property. Most banks start off at 15% down, in all honesty, to get you actually priced and get you into a home, to get you an investment property going. You're probably looking at doing 20 to 25% down. That's what's going to help you. And the more you put down on an investment property, the more it's going to lower your rate, potentially. Your debt to income will be a big factor here, and that'll be less than 45%. So that's why we're looking for any and every income that you can possibly get, and it has to be documented through your tax returns. While we're analyzing debt to income, we're also looking at any and every real estate property you own. So if you have several properties, we're looking to get your insurance that you pay on it and your taxes on there. And that's why it's imperative that you do claim those on your tax return so that we can deduct those from you and not have to count those against you. I think one of the tricky things about investment properties compared to any other type of mortgage deal on our end is that you will be required to have reserves. It's going to basically be 6 months of what the monthly payment would be. If you have more real estate property that's financed, you'll also need to add 2 more months to that. So that's kind of the big deal there. And that money that you have can be in a 401k in your retirement account. It can be in stocks. It just has to be liquid stuff where we can pull it out from if we were to need it. And it has to be in your personal name. It can't be in a business name or someone else's name. Another tricky thing about investment properties is technically they only let you finance up to 10 properties with us. So you can have up to 10, and each bank, we do deal with several banks as far as on our end, investors that we'll give your loan to. We can give you a max of four loans, up to 10 altogether. So depending on what you're trying to do, how many properties you're getting. One of the benefits of doing it this way is that you're on a fixed rate up to 30 years, and that really helps with people who are starting off trying to do investment property and getting everything in the right way. Come on in.
Let's go.
Another big deal with the investment properties are the appraisals. When you're out there looking for properties, you want to make sure on my end that you're getting properties that are basically livable. They don't have too much structural damage, because if they do, we won't be able to do those types of loans. There are some other banks in town. You have to look for them that do some kind of rehab loans where you can probably get money back out, but it's very hard to find those, especially in the investment world. And other ways that you can get money to buy your house is through home equities on your primary residence. So if you have a house and you're trying to get started, that's probably one of the easiest ways to get cash to buy a property, especially if it's one that's not in the best condition and you want to get it going and flip it and do that kind of stuff to get renters in it. Also, you can do a cash out on any investment property that you do own. And then the other loan that you can do is with Blake, the commercial loans, but we'll talk about those here shortly. I kind of went a little fast on that one. Anyone have any questions on that? Yes, ma'am.
Okay, so if you want to buy a property with someone else, how does that work as far as a loan for an investment property?
Tell me someone else. Who is someone else?
A coworker or a friend.
Okay, it's real simple. You can go online and do your own contract out there if you're not trying to get a realtor involved. You'll do that. You'll bring me the paperwork, or you can also take it to a title company. Your title company will be your best friend during any transaction. They're going to be the ones who essentially clear out all the titles to make sure that everything's clear on there and see if there's anything that you need to get figured out. When you bring that contract to us, that's when we can start the process. If we need to say, okay, you need to do more down on there because we can't get a price, then we would talk about those options at that time.
Okay. And this is just a weird question here, but can you take out of your 401k can you borrow from your 401k to do an investment property, or only a home that you can live in?
So you can borrow out of your 401k for whatever you want. Now, going back to the tax advice, you'll have to check with your accountant. You can only pull out of your 401k one time, and they'll only give you up to $10,000 where they're not gonna penalize you for it for pulling it out, where you can use it for your residence. And that could be a residence for yourself, for your child, for your niece, but it's only one time that you're able to take advantage of that tax benefit.
Okay,
If that's kind of where you're going with it.
and it's only 10,000 essentially?
Correct. As far as the tax credit, or what they let you not have to pay taxes on,
Okay.
on that part. Yes, sir.
How does the home equity line of credit work with y'all?
We don't do line of credits, but we do a home equity. So the home equity would be 80% of the value of your house. Texas is a little bit crazy where they have a 2% rule and we can't exceed 2% of the fees on a loan. So kind of your base price that we have to look at is $100,000 for a loan. Once we do the loan, it takes about 30 to 45 days. We have an appraisal done and all that stuff that's done in there. Once everything's done, you go to a title company and close. We basically cut you a check. You can sit on the money, you can use the money, but we won't actually follow up to see how you use the money. That'll be up to you to use on your own personal preference.
Would that be structured like a second loan?
No, we would pay off your first lien if there's a lien on there. Correct.
And you said 80% of value.
Correct.
And those are usually higher rates than getting,
So if you want to go that way, purchasing a home is going to be your lower rate. A home equity will kind of be in the middle, and investment property will be priced a little bit higher. So you'll get a little bit of a break off the interest rate at that point. Any other questions?
And it's not drastic though, the rate difference. I mean, it's not crazy.
Yeah, I mean, it's probably 4 3/4 up to, these are just basic rates. Probably home equities are at 5 1/4. And investment properties right now, probably 5 3/4. That's kind of what we're looking at.
that's a 30-year?
Correct. And investment properties, it's a whole lot easier for me right now to price a 30-year than it is 15 years. And that's just kind of how the market's going on those. Any other questions? Yes, sir.
What can you tell us about delayed mortgage financing?
Delayed, well, tell me what you're trying to do with it first.
If we refinance or cash out on a property, do you offer that? Do we have to season it for 6 months, or do you offer the?
On investment property, you do. So if it was your primary residence, you wouldn't have to. On investment property, you'll have to be there for 6 months in title before we're able to do that.
Is that just with your bank, or is that with all?
That's gonna be basically across the board. That's gonna be a Fannie Mae and Freddie Mac rule. If it was a personal property, and you had to use your own money to get stuff going, then you can do the cash out right away within 30 days of basically getting the house.
So if you pay cash on an investment property, then you can use the delay?
You still have to wait 6 months on investment properties. It'll be, anything on investment property, you'll have to be in title for 6 months before you're able to pull any cash from the equity.
So, but if it's your personal property, then you could do the 30 days?
Correct.
So if you house hack, then you can?
If it's a if it's labeled as a primary residence, then everything completely changes on that one.
Okay.
Any other questions? I'll stick around and talk. I'm going to pass over to Blake here, but you guys are always more than welcome to call me. I'll have some cards out here. Visit me at the branch if you want. You're not required to fill out an application. We can just talk hypothetically about the things you're wanting to do and kind of see where we're at. You can tell me where you're at, and any questions you have as far as the mortgage is concerned, I'm more than happy to help out. Blake, I'm going to turn it over to you.
Did she want to go over some stuff, Lee, behind you there? No? Oh, okay. Well, he told us she was gonna go over some stuff. Like I said, my name's Blake Cauthen, Community National Bank. I'm on the commercial side. Just kind of a show of hands, do we have any native Midlanders here? Okay, 2, all right. So I'm a Midland native too as well. You're seeing fewer and fewer of us, but just kind of curious how many were here. Graduated from Midland High, went to Tech State, San Marcos. I went to UTB, got my MBA over there. Been with the bank about 14 years. Seems it's been a long time, but a good time. Just give a little background on CNB since we're here. Formed in 1984. Started on Florida Street, kind of on the south side in a trailer. And we've grown into about a 1.2 or $3 billion bank over that time frame. Got 12, made up of 100 local investors here. We have 12 on the board of directors now. We have 10 branches, Midland, Odessa, and Stanton, and we did open a kind of a LPO, which we call a loan production office in the DFW area. So if you're looking at houses in that area too, we can service those needs as well. So hopefully we'll grow that area and get a branch up there here shortly. But that's kind of a little background on me and kind of the bank and Eddie. When we analyze the loans, we always look at the current environment. What's the growth strategy? Is it, a mature market industry where we're at? Of course, we know Midland's in expansion mode. Kind of some stuff that I found interesting the other day, talking about we have right now 10,000 commuter workers. So Monday they show up, Friday they leave. That's a pretty large number that I heard the other day. 10,000 is pretty big. Also heard that we have an estimated 15,000 additional workers that we need right now. That's another 15,000. That's in the Permian Basin in Odessa. That's another large number that is unfilled. And they're also estimating by 2030 that we'll need an additional 60,000 workers. So that's a lot of people. What that means is they need houses, they need apartments, they need something, which is good for you guys. We're also seeing another kind of constraint in Midland, Odessa is land. All the outskirts of the land is being used by commercial warehouse, development, commercial, everything else. I think we're going to see a lot more, reuse of kind of old property that was, nobody wanted to be, but now we're tearing down houses and rebuilding. So I think that creates another opportunity for everybody to redevelop some old areas that just were uninhabitable before. So we talk about also the city council have approved 1,500 apartment units this year. So they're either not constructed or in mill construction, but 1,500 apartment units. So that's kind of pretty good knowledge there as well. Kind of also going over part of the commercial side, we do new interim construction loans on my side. I kind of give you a little, I kind of like data sometimes and kind of perspective of history. So we kind of go back to 2001. We look at residential permits issued. So you look at 2001, we had 175 new residential permits issued. 2017, we had 784. And then through September of this year, we're already at 863 new houses. So we'll definitely excel that number. The peak kind of was in 14, as you can imagine, on a $100 roll, 929. So we should surpass that as well. Odessa, I do have some Odessa numbers too. Kind of same trend, but Odessa is kind of a little bit different. They've kind of a little bit different, but so it goes back 2003 is all I have. 174 were issued, and through 17 was 548, and then through 2018 we're already at 610 for the 3 quarters. So it's just kind of interesting data to see how many new permits. But that's part of what I do is I do a lot of interim construction loans for builders and various investors as well. I thought Julie was going to go over some of the data, but I can kind of give you a little bit. Right now Midland only has about 350 active houses on the market. Odessa's got about 204 currently right now. And what else was I going to show? I guess that's
You have
it.
the average price of a house on the market?
I don't. Is it like 350-ish or something?
I'm sorry,
Yeah,
I've
no.
just been running today, but
That's
I'll have
fine.
it for.
No, yeah. I thought she might have some of that data, but
Yeah, she usually does.
yeah, she's going to get it. But I know, like I said, there's about 350. We are kind of seeing a slowdown right now. I don't know if that's just timing. Every time usually slows down at the end of the year anyway. Oil companies, working on budgets for year end, getting ready for January. So we have seen a little bit. They have spiked a little, but I think that's just timing right now. So I was going to kind of go over a couple deals that we have. You got your resale, where you buy it, fix it up, sell it, and then you also have our long term. Whether you're in the rental market, you want to get as many as you can. Kind of go over what we typically do. So on the resale side, we finance 80% of the project, or we got to get an appraisal, so it has to appraise out. Obviously, if it doesn't, then we can only do 80% of the appraised value. On those, we typically set them up on 12-month maturity. So that gives you 12 months to get it fixed up, do your renovations, and get it sold. We do require interest on the outstanding balance due monthly, so you will have carrying cost in it. That is a variable rate, like Eddie said, fixed rate on the mortgage side. We do have variable rates, so it's based off Wall Street Journal Prime. Prime right now is 5.25, and that's another thing they're looking at expecting to go up over the next year. You'll see increasing rates across the board, I think as well as mortgage. But the Fed is kind of estimating prime to go up to maybe 1.25 basis points this next year. So, cost of borrowing is going to get higher too. So you got that in there as well. We also do typically charge a 0.5% origination fee in those. So those are kind of, and at 12 months, if it doesn't sell or it takes longer, we can always do like a 6-month extension. But typically, if it hadn't sold by then, we put it on a term. We'd say go see Eddie, put it on a permanent, or we would do the permanent financing for it at that point. Kind of on the permanent side, if you're looking for the rental, we finance 8% of the purchase price as well. You got it pulled up yet? Or?
Sure. Right now in Midland, we have 1 bedroom or more, 361 listings.
Okay.
So that's removing your vacant lots. The average price is at $509,169. The median is $375,000.
That's affordable housing, right?
It's affordable housing. So our average price per square foot right now is $173.93. The median is $153.24. Our average days on the market are 57. Those have moved up some, and I haven't calculated, but
57 or
57,
Do you have median?
37. So we've seen some of that, I'd say since late summer or midsummer, we had like 1.1 months of inventory. And the last time I calculated that within the last week was 1.6 months of inventory. If you understand that nationally 6 months is a balanced inventory where buyer and seller are supposed to have equal bargaining power, that's still a tremendous market. But for what we're used to, I get calls, the house has been on the market 5 days, what's wrong with it? There's nothing wrong with it. It's not $200,000 or under, that's the only thing, and so. That's Midland. I'll be glad to pull up Odessa. Do we have people interested in Odessa? Okay, so you want to take off and I'll get Odessa?
Yeah, so like she said, I mean, it's, we're kind of spoiled here. You think if it's been on the market longer than 2 hours, something's wrong with it. And it probably is. If it's on longer than 2 hours, you're asking way too much now. But if it is going fast, it's pretty quick. So kind of where it was on the other one, we do long-term financing on our side. This is typically, Eddie didn't mention, but on his side, you can't put it in an LLC or any type of corporate structure. It's got to be in your individual name. So if you're, like he said, kind of beginning, start over there, and then maybe you create your corporate structure, and then you can move over to our side and finance more. We don't really have a limit, just as long as your, qualifications deem you necessary.
And the rental rates?
Huh?
The rental rates?
As far as apartments?
APR?
Huh?
APR?
On the which side? The permanent financing?
Yes.
So that I'll get to. We do it a little different. We fix it for a 5-year period. We don't, and that's just kind of going to depend on credit and everything else. Like I said, prime's at 5.25, and we're not going to get anything below that. You're probably at, it just depends on credit and kind of the whole scenario, but my guess is with it going up, you're probably above 6. But like I said, we fix it for a 5-year period. At that end of that time, you'll have a balloon. We renegotiate the rate at that point, and then you do another 5-year period, and then it keeps going like that. The longest we can do is a 20-year amortization. We don't offer 30 years. That's another benefit that AD does on the mortgage side. You can put it on a 30-year, but just on the commercial side, we're a little more conservative. We keep all these in-house, whereas our mortgage department sells the majority. So we got to make sure that for our investors and our deposit holders and everybody else at stake that we're financially responsible. Like I said, kind of parameters that we look at, same thing, debt to income, we're probably 45% as well. Or if it's in a corporate structure, 1.25 debt service coverage ratio. That's kind of, make sure you can cover your debts 1.25 times. We also look to have about 5 to 10% of your net worth in liquid assets is what we kind of underwriting guidelines that we just kind of look at. When we bank real estate investors, we know time is money as well. So things to kind of that speed up the transactions. In our side, I don't know other banks, like I said, I've been here 14 years at ours, but, a lot of the guidelines for appraisals are pretty set, but if you can get away from doing an appraisal and using what we call a commercial evaluation, that speeds it up pretty fast. So you got, kind of our guideline is 250,000 or less only requires a commercial evaluation. That's a broker going by and giving an estimate of what they think the property's worth. And those we're getting back within 3 days. Appraisal, we're lucky if it's 3 weeks, to be honest, maybe 2.5. But so that right there, 3 days versus 2.5 weeks can speed up a lot when you're trying to get a property, do something quick with it, or just return on your money. The other way, like I said, it's also cheaper. The commercial evaluations, they're maybe $300, and appraisal is probably $600, somewhere in that neighborhood. So it's about half cost. And also, the other way to speed it up is do renovations out of cash. So if we finance the house, and if you can do it out of cash, that's even better because it'll speed up. Because if you need the renovation money as well, we got to get appraised, with what renovations you're going to do. If you're going to add on square footage, or if you're going to do just the typical kind of renos. But we would have to get that appraised, so that would slow it down as well. And the kind of third thing that I guess you'd want to work towards is set up a line of credit. I have quite a few real estate investors that have line of credit. They get one rental house that's paid off, or that's, they're using a real income. We put that as collateral, and we set up a line of credit up to 80% of that, and then that they're able to, just call me and say, hey, I'm buying a house today. I need, 100,000, whatever it is. Okay. But that's kind of the goal, is if you can get that, do enough flips or do enough turns that you can get one paid off and then use it as a line of credit to get cash out. That also allows you to get them at foreclosures, because foreclosures, they need cash and you can't really finance them. It makes it difficult. Did you have Odessa's pulled up?
So today, Bradford County, they have 208 listings. The average price is $355,008. The median is $259,900. Average price per square foot is $133.37, and the median is $126.07. Average days on the market in Odessa are 62, and the median would be 35 days on the market.
For some reason, Odessa's always had fewer houses and a little longer on the market. I don't know what the reason. Everybody can take a guess, but it's just kind of the way it is. I mean, y'all have seen it, I'm sure, but just fewer houses and a little longer on the market. Yes, sir.
How's your commercial line of credit structured?
So yeah, commercial line of credit, similar terms, kind of, I guess, as far as the resale type deal. It's 12-month periods what we look at it. We set those up as. It's interest only monthly on what's outstanding. So if there's no money, we don't. Some banks will charge like a non-usage fee or something, but we don't charge a non-usage fee. So it's only what's borrowed on it, and then we set those up. We get an evaluation up front. 80% of it is what we can give you, and then go from there.
Similar rates?
Yeah, so it's based off prime. We variable rate, so we float it at whatever prime plus something, whatever the credit is for it. Kind of looking at we already talked about the Fed increasing rates, so it's going to get a little more expensive. They project 1.25 rates increase.
What did you say prime was right now?
5.25. How much has mortgage gone up lately? Like, has it been pretty drastic, or is it?
Yeah, it's been going up little by little, but it's going up.
Yeah. We're kind of, nobody knows when the peak is, but I don't think it's here yet. I think the best yet's come, right? We heard that, haven't we? Any questions? I mean, that's kind of what I was just kind of going to give a overview of the real estate commercial side of it, how we do it, what we like, and hopefully y'all got some questions.
So when you talk about commercial, what kind of properties are you talking about?
So yeah, we do both, residential commercial that you're going to hold and rent out, and then we do a lot of what we see is really big right now is the commercial warehouse development side of it, and those rates are very lucrative. So we do both of those, yeah. And we do the interim on them, the construction and the permanent, which a lot of people, or some banks won't do the interim, but we do the interim as well. Yes, sir.
Are there any challenges to putting deed in that property into an entity and then having a mortgage in your own name? Like if you wanted to take advantage of 30-year
Ready?
mortgage, but having the property owned by a company?
You can call it a 2 on sale clause.
Oh, okay. Have you guys ever?
Not in our bank, basically on the mortgage side, we've kind of just stayed with the personal name, keep it all personal. And if it does come in the LLC or anything else, we go commercial side.
Yeah. That's kind of the rule of thumb, is if it's, they can't do anything on that side of it.
Could you get a DBA that was DBA that was unincorporated?
Title
Was in the DBA name?
That's a Eddie.
Legally, you want to-
Same thing, so if we're doing
Personal.
yeah, so we can do it that way, but we still drop off the sole proprietor part, so the DBA would just be obsolete.
On the side.
On our end, so that's just kind of how our underwriting department goes. There are some banks, like I said, that would potentially probably do an LLC or a DBA, a sole proprietor, through a regular mortgage. And when you're looking at mortgages, this is aside from Blake's part here, you kind of have to really look at the fees. That's how you really compare your apples to apples on what the banks are charging you and the rates as far as what you get there. Because a lot of them, your rate will be increased once you throw that in there. Now here in our area, because of how we're structured, and a lot of Midland banks are more community oriented, they kind of do two separate things where a mortgage will be in your personal name and the business side will be going through a commercial lender side. So that's kind of just the tricky part here in this area.
So you just leave it off, is what you're saying?
Correct,
Yeah.
we would
Just
leave
put it
that
in your
off.
individual name. Yes.
So is the benefit with going commercial, and I mean this as a question, I'm
Yeah.
not telling you what it is. For a 1 to 4 unit, if I come and see you, the benefit is the potential of the entity protection.
Correct, yeah, so you can put it, structure, and from an accounting standpoint, there's other benefits too. We're not accountants or anything, CPAs, but there are other, structure from legally and from tax side savings too, to put it in an entity. Now, like I said, you lose the 30-year mortgage if that's what you're wanting, but it's kind of give and take on, what you're after. So you gotta look at both sides, yes, but that is correct.
Is there any way to get creative with the 80% down? Is there any way to, like a second lien type situation or something where you can move?
So about the most creative, there's not on my side, but what I would suggest is maybe if you already have a house, like he said, maybe do a cash out equity or a refi or something.
Okay.
And then take that to my side and use that to apply towards the 20% down.
So, go ahead, you have one.
Go ahead. Uh-huh. Yes, ma'am?
Does the bank have any other information besides the workers that are needed and workers expected to kind of assess how long this sort of boom is going to last?
So, we do analyze, we also do oil and gas lending, production lending. And we do have kind of a pricing committee that meets, regular to see what obstacles are out there, what we think trends, market, we do, but it's just about as good as everybody else's guess on when it will, we don't have any magic bullet. That's why we try to underwrite conservative, so if it does go down, that, we're still fine and we'll weather the storm, so to speak. But optimism is pretty high as far as that it's, everything we're reading and putting together ourselves, that it's gonna last. I wouldn't say last, but instead of, we went to the mayor's call to action meeting, instead of boom and bust, it's more cyclical, just a little, not as boom and bust, but we need to get it, he was saying we need to get out of that mindset that it's gonna stay around, but it'll have some ebb and flows, but it's not gonna be a bust type deal. But, and you read every major oil company and they're projecting some record stuff. So we're hopeful that it's going to last a while, and but I've been here, born and raised since the 80s, and it has, it's been up and down. But I will say the amount of infrastructure and money they are spending here is different. Like I said, in the early 2000s, everybody shut the lights off and went, everybody, all the majors, left, and so they're all putting major dollars back, which is a good sign now. Do I think it was going to stay at 80 or 100, forever? No, but do I think that there's a good chance that, they're committed? So I don't know if that answers the question, but but we do have a pricing committee that and the biggest kind of thing we have is we know our customers and talk to them on a regular basis. So any indication they see of slowing down or something, we're usually pretty on top of to kind of talk to other people and in the local economy and see what they're seeing.
Okay. So since the 80s, how many booms have you had? Okay, since you've been in banking.
Yeah, since I've been banking, to be honest, 2001 was $10 roll, right around there. So it was pretty, it was pretty bleak in 2001 and, late 90s, I guess, in there. And it kind of peaked back up. I mean, it's been 2 or 3. Yeah. But yeah, 2001, you could bought all of Midland pretty much. No, not all of Midland, but the houses that are 500,000 now are probably 50,000.
So, here's another question. I know that we're running pretty close to pipeline capacity right now.
That
It's
is
really affecting a lot of things, CDO and all that. There's 2, if not 3 pipelines that are in the process. Since you're going to those meetings, when are they due to completion? When are they supposed to come online?
So yeah, that's the biggest, our engineer, George, we have an in-house engineer that, does our own gas stuff and what we call the differentials, what you get paid for your oil and what, is the difference of is usually like maybe $5, but it's gone up to like $15 in some cases. And that's a huge number. And part of that, like he's saying, is the pipeline, there's not capacity and, so they're projecting hopefully by the first quarter of next year that'll start to ease.
Is that when they're expecting the newest?
Yeah, some of the new ones to come on, and then you're also seeing what we call ducts, drilled uncompleted. So people are just not completing them until the price differential gets a little better. So, but it's kind of problem too is you got these sinking ducts like we had when price was low. You get them, you get price going up, and then everybody completes their wells, and then you got the same problem still. So it's going to take a while to get kind of worked out.
What areas in the Permian Basin that are strong producers have pipeline capacity available? People are moving to temporarily.
I don't have it off top. No.
It might drive, with real estate.
I do not have that off top. No. But our engineer does, probably.
Well, it's not really your.
Yeah.
So is the commercial line of credit structured like a HELOC? You have to renew once a year, or?
Yeah, so we do have it set up on 12-month maturity, where you provide annual tax return, updated tax returns, financial statement. We make sure everything's still qualifying, no major changes, and then we renew it. We do, on the real estate side, it's just you don't have to go through title and do all that again. It's just a in-house loan docs that we prepare. So it's easy.
What kind of fees are on that?
On the, which one? Just the renewal process or the?
Yeah, on the renewal.
Yeah, so on the renewal, it's just, originally we charge about 0.5% up front. On the renewal, right now, it's a $250 processing fee to complete it, so it's a lot less. And then you got to pay if we have to have an updated appraisal or something like that, But they're usually good for 2 or 3 years, depending on if we've seen any decline or anything like that.
That's just on money used.
Any other questions?
I got one.
Okay.
I'm from Hobbs,
Mhm.
and I've noticed a lot of multifamilies come on the market lately.
Mm-hmm.
Is there any reasoning behind that?
Why they're selling them now, or I don't know a reason. Eddie, you got anything on multifamily or?
Some of the people that I've spoken to, it's just a lot of people bought those houses a long time ago, and they're to the age where they're kind of ready to just let it go, and the price value of some of those properties compared to what they originally got it, and kind of if there's any headaches with it, they're better off selling it right now. and moving on forward. And that's kind of what happened with the apartments too. So the apartment
Yeah.
complexes here, when this whole boom started going, these companies started saying, okay, it's time for us to pull out, and they had all these new investors come in and start buying up these complexes. And same thing, it was just, they felt like they were gonna get their money's worth from everything they were done, and they're ready to move on to something different.
So is it something for a new investor to shy away from?
It's basically, that's gonna be up to you. Everybody's gonna have their own different preference as far as what you're looking at, what your business plan is, what your goal is, as far as what you're wanting to do, and kind of see what your pricing would be as far as to get the property and to actually have renters in there and the type of renters you get, that kind of stuff.
So I have a dumb question. What is a multifamily? What does that consist of?
Do you mean commercial, 5 and above, or?
It's 5 and above is what I.
5 and under?
Yeah.
Okay.
And I think some of them too are that, you know, you've seen people turn in multifamily more, add on, do different things to it, so now they're selling it. And then they're rehabbing anything that, you know, there's a lot of kind of apartment rehabs out there too right now that are getting done and completed. I don't know, just anything that can be, you know, improved right now is they're doing it.
And you'll see a lot of these types of properties here on the west side where I see a lot of them that have come up. I don't know if just back then, they were just smaller little complexes that somebody had, and they're just moving on to different things. And the people are getting them, are redoing them, remodeling them, and revamping them up, kind of to match up with what the market is demanding for it, and they're getting their money's worth.
Okay. What do you mean by the west side? What are you talking about?
So kind of mid-Kiff towards where we're at right here. Back here, this whole back part of Thomason. If you really go through the neighborhoods, you'll see some of them. They're like apartment complexes, but they're not the huge, massive, big ones.
It's like 8 units maybe,
Yeah.
something in that neighborhood. Do you have something, Jill?
I was gonna ask, on your duplexes, triplexes, quadruplexes, have you tried to do mortgages on any of those lately, and if you had trouble with appraisals, being able to get them?
We haven't had any. I haven't had any lately, but I can do those as long as it's less than 4 units. We can do them. If it's more than 4, usually the people that are coming in here and grabbing them have some type of line of credit set up on the commercial side, and that's what's kind of making just that whole process a lot easier and smoother for them, and what makes them come off the market faster if they're coming up.
You can do the appraisal
No.
yourself, or?
No,
No.
Alone.
They'll-
And we are seeing, have y'all seen much appraisal issue, or y'all, and as far as values, or has it been coming back fine?
It's been coming back fine. We were at I guess the part that we're seeing with values was with a lot of the realtors kind of were picking the prices to be pretty high, and the appraisers were coming back in and saying, no, they're not valued that much. We're kind of getting back to being balanced again. And that's kind of the turnaround time that we're having with the issues with the appraisers, as far as why they're out 3 weeks, if not longer, and they've increased their prices as well because of the market and the demand for them being out here. And we use a lot of local appraisers. A lot of these local banks will use local appraisers. We do have out-of-town banks that are internet banks that will send in appraisers from different areas of Texas, and they don't have the right comps, and they're trying to get comps from the Board of Realtors, and that's kind of where we're getting issues as well in pricing.
Thank you.
No problem.
On our side, we're not seeing too bad of appraisals. They're coming in mostly at, I guess, we're not having any issues, I wouldn't say, just time-wise. On a commercial appraisal, not necessarily a residential, but truly just a commercial, you know, a warehouse shop type deal, it's a month plus right now. And it's not easy to become appraiser, so I guess.
Any more questions? Let's give a hand to them.